Hello and welcome back to Bunnex Investment Group. In this video, I'm going to teach you an A+ market maker entry checklist, which you can apply and make money out of. It's basically a trading strategy that simplifies how you approach the markets. So you are going to learn about 1, stop hand and inducement flow, which is the first and most important part. Second, you're going to learn about market structure shift, whereby we talk of break of market structure, and then zone of entry, entries, and last but not least, we are going to talk about examples on real charts. Alright, so before we talk about anything else, we need to define this model because it is the one that we are going to use to make everything that we are going to talk about. This model consists of 4 steps: 1, 2, 3, and 4. Please picture this model in your mind so that you can fill in with data that I'm going to provide you shortly. Firstly, stop hands. When the market intends to reverse, it induces or fakes the reversal. They usually create a first low, and then later you'd see the market actually grabbing prices below that first low. I've seen a lot of context on this particular scenario, whereby some call it liquidity grab, some call it liquidity sweep, but it's basically a stop hand in actual fact. It will then come to take out the faked low in this particular manner. This process is what we refer to as stop hand or inducement flow. By inducement, we are saying there are traders who are breakout traders and would like to trade when the market goes beyond the first low price. This is because when traders enter the market, they usually set their stop losses below the last low. So you'd see people actually writing dollar signs. It's all because there are orders sitting right in there. So here is the illustration. We can see that the market was actually going to the downside, created this low, and after creating this low, this is the one that we are referring to as the initial low. After that initial low, we can see the market actually breaking that initial low and creating the stop hand. So whenever we have this low and create this low, first step has been satisfied. After the stop hand, the next is structure shift. We can see that there has been first low, second low, and structure shift is basically a quick and fast move away from that zone. Why fast? Because we do not want traders to have an opportunity to close off their losses or to actually manage to shift their stop losses and so forth. So in that particular case, we can see the market actually turning violently right, passing through this structure, which we term break of structure. So this will result in breaking of the recent high, which we call market structure break. And this is the second step after stop hand has been done. Third step is now the zone of entry. We've seen the initial low being set. We've seen that initial low being broken. We've seen the market breaking structure. And now the next is to see the market to come to the entry zone, which is basically a 50-50 or basically trading off the 50 EMA. This is a 50 EMA retest and it offers us entry. So final step is now to take action. Calculate your lot size, and when the market comes to the 50, you take that entry. So assuming that you've seen stop and break of structure, final step is to see the market retest and enter the market. You're saying at retest of 50, that is where you are going to enter the market. Let's have some examples. But before we see some examples, check out our free Telegram channel. I share a lot of free educational content, that is flashcards, sometimes free signals, as well as trading advice. I've left the link in the description box below. Alright, so this is odd against CHF. The first step is to always look for lows that are contradicting each other. A turning point that proved to be a fake later. That is the first step. We are trying to build up that template that I've shown you as a model. So in this particular case, we can see that there was this low that was issued. The market induced traders to go long. There are traders who actually went long here. And then after that, we can see the market coming to take off this low, creating this particular move. Then after that, we can see a push to the upside, which was violent with many green candles breaking structure that was here. So low issued, raid of stops, break of structure. The next step is to make an entry at 50 EMA retest, which is at this particular point. And the market continued to go to the upside, basically like that. Let's have another example. Before we go to the next example, trading will require you to be highly disciplined. That is why you need something like the SideGuard EA, whereby you actually are closed out of your trading account if your maximum daily loss limit has been met. You set the daily loss limit. After setting up the daily loss limit, this EA will close you out of your trading account and opens or resets the following day. That is, you are not going to succumb to overtrading, but to trade only what you are required to do for that particular day. This EA is going for $30 per month, and you can get a copy using the link that I've left in the description box below. Let's proceed to our example. This is odd against USD, and what we are seeing here is basically this high being issued, and after that high being issued, we can see the market breaking that high, creating a new high. Therefore, this was the stop rate or the stop hand. After a stop hand has been issued, we've said the next step is to see a structure break, which occurred at this particular point and broke this low. After breaking the structure, the next is for us to see or look for an entry, and an entry was issued as a 50-50 or 50 EMA retest at this particular point, and the market went right to the downside like that. Here we can see another opportunity that is almost arising. We can see that there is this high that has been broken, or stop hand has been issued right after this high, and then we can see that there is also a break of structure which has occurred here. And then our next step, or where we are going to take action, is going to be at the 50 EMA touch or 50 EMA retest, which is basically going to be around this particular point. So all that you need to do is to wait for the model that I've shown you to be satisfied for you to make an entry. You can actually learn easier and much more clearer trading strategies in the top 1% traders course, which goes for $60 lifetime training. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.